Welcome to Sparta Market Outlook, your go-to source for the latest oil market trends, insights, and strategies. In this podcast, Sparta's team of analysts and experts break down complex market information into actionable, forward-looking insights, helping you make informed decisions in a volatile market. For traders who want to anticipate future pricing trends and seize opportunities before their competition, Sparta provides real-time, actionable market intelligence. For more information about Sparta or to book a demo, visit our website at spartacommodities.com.
Welcome back to the Sparta Market Outlook Podcast, your weekly guide into what's really moving the oil markets. I'm your host, Rachel Williams, and this week we're going to dig into US inventories and what they're signalling, the latest OPEC rumours ahead of the November meeting, Seihan's restart, and Venezuela pushing exports to their highest level since 2020. We're also going to cover what's driving the strength in gasoline, the pressure building in the European naphtha markets, and how crude spreads and differentials are lining up across the regions. So I'm here with Jorge and Neil this week. They bring the facts, I just bring the microphone. So hi guys.
Hello.
Hello, Rachel.
Brilliant. Okay, we've got plenty to get through, so we're going to jump straight in. Neil, let's start where it really hurts. Supply and US inventories. So OPEC is still hiking, Seihan back online, Venezuela shipping like it's 2019, and US stocks building right on cue for autumn. Is there anything bullish left in this picture, or is it really all downhill apart from Russia?
The way I see it is quite a steady stream of bearish kind of data, so to speak. And the background to this, just as we record on Thursday morning, is that the ICE Brent prompt spread is 30 cents and the Dubai Dec-Jan swap spread is now 10 cents only. It was below that a few minutes ago. So we're definitely a lot weaker, and it's definitely a big contrast to the November ICE expiry, which is very spicy, if you like, but I think that was all kinds of dynamics probably at play. But I suppose the true spread just now is currently 30 cents, so it seems weak. So where do we start? We've got OPEC. We've got another OPEC meeting coming on the 5th of October. They're probably going to hike again, it seems, maybe 120-ish, 150-ish KBD. There was a big rumor that came out all of a sudden it was going to be 500 KBD for the next 3 months. And the market panicked, and then the OPEC secretariat came out and said, wait, this is nonsense. But it's very kind of interesting that these rumors should start. But anyway, OPEC seem like they're going to hike. Of course, they updated their compensation plans. Apparently, Kazakhstan will be forced to produce 600 KBD less by June 26th. I think the market probably doesn't think that will happen because the history on that is not very good.
Yep.
And there's all kinds of stuff. So Brazilian supply again, super high in August. Is it Seihan or Seihan? I never know which one.
Yeah, I said Seihan. I could be completely wrong with that. So it could be Seihan actually.
I don't know. Well, let's go with Seihan. So that's the KRG production that's supposed to be starting. I think there's now oil going into pipe at the rate of something like 200 KBD. I'm not sure that's resulted in any export yet. It probably takes a while. But that seems like it's definitely coming back. And there's a max capacity of something like 400. So more oil coming out of Seihan. Venezuela's oil exports are the highest since February 2020. It just all seems very relentless. And of course, what we've been talking about over the last few weeks is the state of play in the US, because if we assume that WTI is the marginal barrel here, as it always has been, then we should start to see it show up eventually in the US, this kind of ample supply. Yeah. And if you look at if you take the inventory numbers at face value, I mean, we got to build a smallish build yesterday. The 4-week average build for crude, commercial crude, is about average with the last couple of years. But the big change, and I think we should emphasize this, and it's very important, and the market usually misses it in the headlines, the big change appears to be the net exports. So net exports are up more than 500,000. I think it's 650 KBD year on year for the last 4 weeks, and refinery intake is up. So for me, they're exporting the pressure out. It's not showing up, and it's not showing yet in stocks, but I think it's still very bearish. And I think you can start to see, and we'll pick this up in a few minutes, I think you can start to see some of this pressure gradually building up in the physical crude market and also the paper. And I also want to link this back, sorry to go on another monologue, how many of these have I had through the year?
Keep going.
I want
keep going.
to link this back to the PSN, right? The monthly US supply data is relentlessly strong. So it was a new record high in US crude supply. The growth is accelerating, partly on a low baseline from the same month last year, that's July, but it's ticking up month on month. It's just that whole narrative has been disproven. The US oil producers are just pumping. It's just relentless. And that's obviously part of the whole story that we've just sort of painted the picture of. The other thing to pick up is on product stocks actually is a bit concerning. So the rate of product stock build in the last 4 weeks in the US has been quite strong. From speaking to the market, this is a bit different to crude because it seems like high frequency crude might be building in other parts of the world, whereas US products are building, but it seems like products might be drawing in Europe. That's just sort of rumor or whatever. I don't really have access to that data. So it might be less concerning from the margin perspective, but definitely I think on the whole, the US stock picture doesn't look that great.
Okay. We can talk about kind of what do we think this looks like going into Q4 on course corrections for crude, but certainly there is, speaking to people this week, there's an incredible amount of oil out there at the minute. And margins are still great, right? So we can pick that apart. Was there anything else that came out of the news this week that could be of interest?
There's only one more thing I guess there were loads of things that came out, but the one thing that piqued my interest was the private sector employment figures in the US, which had a big miss yesterday, and it just seems bearish. Everybody's expecting the recession. Maybe we're actually going to get there by the end of the year. I'm not the expert, of course, but a lot of things seem to be pointing in one bearish direction right now, I have to say.
Okay. All right. I'll come back to you on crude if that's all right. But Jorge, keen to start with gasoline. So Dangote has gone from being a headline refinery startup to now one of the biggest drivers of sentiment in the Atlantic Basin, and certainly features heavily kind of week on week with us. So with all the instability that we've seen, the strikes, the operational hiccups, even talk of a crude unit shutdown, how much weight should the market really be putting on Dangote as a swing factor right now? And what does that mean for EBOB cracks heading into Q4, do you think?
Yeah, I think Dangote has been the main story for gasoline in the Atlantic Basin. We've seen very strong EBOB cracks, spreads, and also in the US for RBOB. The stronger indicator is EBOB crack right now. And the volatility has matched all the news that we are seeing from Dangote. The last one could be a potential crude unit shutdown in the short term. Also, we have the strikes, and we remember that we have the RFCC stops in August 6th. I think it was the first announcement. So with all these news, we've seen a very strong rally in EBOB. I think the market is pricing an increase in arbitrage from ARA to West Africa. But so far, we don't have seen such a big impact on the physical side because Dangote has exported to the US twice, but one during late August, during September. So that means the RFCC problems have not been translated into a tighter market. But the potential crude unit shutdown and all the strikes that we are seeing, that is a very big risk for the market, and that's why we have seen such a strong leveling in the EBOB complex. And I guess the question is, what are we expecting in the short term? So I think we all kind of agree. We have had this debate internally, and we all kind of agree that maybe it can be a little bit overdone. We came with that idea earlier this week. We have seen some corrections, so I think we have pointed in the right direction, but it's too early to confirm. But with such a expensive European market, with these levels of EBOB, on the arbitrage perspective, we have two dynamics. One is looking at the Atlantic Basin, where EBOB complex is much more expensive than US Gulf Coast. So it does not have a lot of competitiveness in too many Latin American outlets and other Atlantic Basin outlets. And we see the same, or kind of the same story, looking to the east. So Europe is not competitive into some outlets where it can compete with Singapore or AG, like East Africa. And we are starting to see some signals that could point to a ceiling. So, for example, Singapore barrels are very competitive right now into West Africa. If you compare their delivery prices with ARA ones, if you compare LRs, it's a clear win for ARA, but if you compare an MR versus an LR, November deliveries into West Africa, it's cheaper right now for Singapore. So that means if the market is pricing this lower output from Dangote, and then suddenly it's covered by a year Singapore, that's a massive bearish signal, and our arbitrage tool is kind of pointing in that direction. I'm not saying that this is going to be confirmed, but the economics are there. So overall, the picture from on a sporting perspective is quite weak for EBOB. That's why we think that the recent uptrend can be overcome.
Okay. Overall, then, conviction going into Q4, where do you think this market is going to take us at this point?
Yeah, I think we have left behind the perfect storm because we had unexpected turnarounds in Europe, also big expected ones for October. Well, since the second half of August, we have seen that. We have Dangote disruptions during summer until now. We have Russian issues to export product. So if you combine all of that, it's normal that we have seen this such a big rally in the EBOB. But if you compare with on a seasonal perspective, if you look at 2022, 2023, that was the moment when the market was more tight because of the beginning of sanctions to Russia. We are above these levels in the EBOB crack. So I don't think the market has a lot of information to be there right now. So I think a ceiling is more possible than to keep seeing such a strong level.
Okay. I'm going to come back to you at the end of this with some trade suggestions kind of going into the latter part of Q4. But whilst I have you, let's talk about naphtha. So certainly your favourite market, and it's suddenly got all the drama, to be honest. So steam crackers are struggling, time spreads slipping into contango, and Europe basically begging Asia to take its barrels by the sounds of it from your chat this week. So Jorge, is this just a seasonal wobble, or are we watching Europe turn into the world's biggest discount outlet for naphtha?
Yeah, I think we have two different signals. Both are very strong. One is bullish and one is bearish.
Okay.
But to summarize, we've seen a very strong naphtha market recently. MOPJ in positive, MOPJ crack in positive, a very strong backwardation. So summer has been very strong. And then we are starting to see that the market is very weak in Europe. Right now we are seeing the very promising contango, but with a very, very wide margin in today's. And we are talking with the market. We are seeing this is happening, not just from Med, which is the typical source, but also from ARA. So in a moment when Asia is pulling a lot, when we are seeing record East-West levels for Q4, the market right now, it's pretty weak. I think that has been the main topic right now in the market. And I guess that the key is in the petrochemical sector in Europe. If we check olefin prices, propylene has corrected during the last 2 or 3 weeks, like $30 per metric ton. But the big history is in ethylene. We've seen a massive correction, $150 per metric ton since August. And this is obviously harming petrochemical margins. In a moment, the last 10 days or so, flat prices have came off in naphtha, but we have seen a very big rally during August. So this has harmed the margin, and it sets a limit for the physical market in Northwest Europe. So the bids cannot be very strong. You cannot see very strong premiums if the petrochemical industry is suffering in Northwest Europe. And I think that's the key right now. Looking forward, I think the market is supported by the arbitrage. I think since we released the arbitrage tool, we've never seen such a big margins.
Okay.
Maybe around during some period in 2023, but if we are not at the highest level, we are very close. So I think that is going to set a ceiling for naphtha. I'm not really bearish at that point. I don't expect Q4 with a very deep contango in Europe, but yeah, we have the petrochemical complex very weak, and we also have a steam cracker turnaround season in the east. So I don't expect very bearish market in the short term, but let's see in the medium term. Right now, the picture for Q4 is not like very, very supportive.
Okay. Any other calls kind of within naphtha going forward?
Well, I think the main one would be a rebound in Northwest Europe. I'm not very confident about that, but I think it's more likely than to keep seeing a very huge contango. And I think when we will start to see deliveries for December, because right now, second half of November, it's under negotiation in Asia. but we can see a weaker level of East-West because some piece of news are pointing to Russia increasing its volume. That's one of the key reasons why East-West is at these levels. And yeah, if Asia can get all what they want for November deliveries, then when we will talk about December, this East-West level cannot be justified. But yeah, I will double check this call in a couple of weeks.
Okay, fair enough. I'm going to hold you to that. I'm also going to come back to you at the end as well and ask for a bit of a recap in terms of your ideas. So you can take a drink and a breather. I'm going to move swiftly on to Neil. So, all right, let's get into this crude market. So Brent spreads looked, a bit bonkers on expiry this week, but beyond the front, they're already wobbling, as you mentioned. So exports are flying, seems to be a lot of crude around. US data looks a little messy, and the physical diffs from Dubai to WAF are all getting knocked about a little bit. So are we just watching the ARBs grind their way to a new normal, or is this the start of a proper downshift in crude, do you think?
I guess you've kind of given the game away a bit.
Sorry, steal your thunder.
No, it's fine. It's just sort of occasionally, maybe for the first time in quite a while, it does feel like the ARBs become slightly less important in the sense that I think a lot of people have been expecting this glut to happen. It seems like the glut is happening. And so, I don't know, it does seem, like I said, the buy swaps are now barely backward. It seems like we're on the cusp of something.
Yeah.
So I don't know exactly where it ends up. It seems like global crude exports are really high. We basically just need to wait and see where this shakes out. What I did want to do is kind of give a roundup of where the physical market actually has gone. And the key one which relates back to our ARBs is just the weakening in Dubai. And it seems like the Dubai market is now on average the hardest hit, I suppose, on a sort of month-on-month or quarter-on-quarter basis. So not only the swap spreads, it's also the premiums for things like Murban. There was a sort of very unusual spike on Tuesday, which started to revert again yesterday, but the direction is fairly clear. Like a lot of the spot AG diffs are coming off pretty hard in line with Dubai spreads themselves. Over in the US, you have MEH, for example, finally beginning to weaken, and that probably could reflect all kinds of things, but on a sort of face value, it will probably reflect increasing availability of WTI next month because we're heading into turnarounds. I think you can see from the data the turnarounds are starting not in pad 2, interestingly enough. So that's probably keeping Cushing stocks under pressure. But in MEH, it seems like there's pressure emerging. Mars diffs are weakening. LATAM diffs are weakening. Guyana diffs are weakening quite a lot. In Europe, the WAF diffs have been weakening. Sverdrup is still super weak. The thing that kind of slightly corrected was Brent, sort of 40s and Brent. So their diffs were back to a sort of $1 premium to the North Sea strip. But it's now sort of like going in the other direction. So the November DFL is coming off, the paper spreads are coming off, and then you start to think that the sort of Brent and 40 stiffs might even look a little strong relative to all the things we've just discussed. So on average, it's going weaker, and I think that's the main message. And in terms of ARBs, the main thing is that the West-East ARB was super open for months, 6 weeks maybe, and now they're looking back to normal, which is basically on average closed. So all this stuff goes in line in my mind, and we'll come back next week and see where the shakeout in spreads actually comes. And of course, the caveat to all this is, in the background, it's hard to have a large short position because every time you do that, you seem to get a headline that basically just says Ukraine has just rocket attacked something else. And that's one of the ones in distillate as well, which is probably explains some of the risk off. It actually seems like there was a slowdown in Ukrainian attacks this last few days, and that's something just to keep in mind. It feels like there's a bit of risk off as well.
Okay. All right. Let's come back at the end then with any conviction about kind of any trade ideas going forward on the crude market. But before we get there, you picked on distillate just now. I appreciate James isn't here, but look, 7 days ago we were waving a pretty bullish distillate flag to a certain extent. Are we still flying that this week, or are we quietly folding it away after those ARBs and the freight moves that we've had?
Yeah, I mean, we mentioned the US stocks. It's kind of interesting. There's two things I want to pick up on distillate. One is that the East-West has rallied quite hard. So Asia has been pricing up, and you can look at the Sing spreads there. They're on an outright basis rallying. So are the cracks. And over in the West, ice gas oil cracks have been coming off. I think that's partly risk off. And ice spreads, particularly the prompt, have come off a lot. And the East-West story is kind of interesting. It kind of defies the logic of Brent Dubai. It kind of defies the logic of relative freight, because TC5 got a lot cheaper than TC20 over the last few weeks. I think it's partly a signal of Europe is sort of satiated. It's got enough supply just now at the very prompt, because we've had all kinds of open arms.
Yeah.
From Sika, we had open arms from the Gulf Coast. We had open arms even from Pad 1 a few weeks back. And I think that's what is helping ICE gas oil price down at the moment. And of course, we had all the reports of the odd VLCC coming into Europe. So it seems like the prompt is weak and it's fundamentally justified. The other thing that's happening on distillate is we've entered this situation again where the Gulf Coast to Europe MR ARB is very, very closed. And that happened, I think it was July when that last happened. And it seems, a big outlier relative to the average. And it's closed largely on freight. And that's kind of interesting in itself. And even though that seems like there's plentiful supply, particularly in Pad 3 or inventory, let's say, to be precise, in the US. And so it's kind of the setup that last time this happened, ICE gas oil spreads actually had to rip to kind of reopen these ARBs. And if we take the view that we have currently on freight, which is that vessel supply in the US Gulf is relatively tight, we can't rely on freight to open the ARB.
Yeah.
So it seems like in a few weeks' time, or perhaps even earlier, ICE gas oil can start to, or it needs to move higher again. So that's the kind of place we're at. And of course, that also makes sense in terms of there has been a lot of risk off. The background is Ukraine is attacking refineries, and it seems like a matter of time until that starts to emerge again.
Okay. All right. So still theoretically kind of sticking with a latter distillate bull run, maybe, especially kind of from the US Gulf Coast for that one.
Maybe in November, maybe November arrivals end up a bit weaker than we've experienced in the last month or so.
Okay. All right. One to watch on that one then. Okay, both of you. As we round this out, Jorge, what are you thinking if you had to put on some risk? Where would you put that at the minute?
Yeah, I'm going to go to, from ideas that I'm less confident to more in the end. So first, I think, on the naphtha market, it's been very volatile and hard to predict recently. But I think that European time spreads could find a bottom soon to the current downtrend. And then I think we will see lower East-West levels from the end of the year. So or maybe Q1 next year. But the whole forward curve right now is very, very strong. And I think that maybe in December or January, we could see lower levels, even some corrections for November contract during October. So this would be for naphtha. On gasoline, I think, they are more clear. And I think we can see lower levels of EBOB in general. I think crack is I'm more convinced about EBOB cracks. And this could impact on TAR and on East-West. So I think, especially on East-West, it has a lot of potential to keep climbing. Since we have seen, we have talked about this Singapore energy competitiveness into some outlets in Africa where Europe cannot go now. So I think, bullish East-West for gasoline would be the main one.
Okay, but slightly pessimistic on the EBOB cracks. Fair enough. Okay, Neil, what are our thoughts on crude for this week, do you think?
I'll do crude and distillate. I think I'd be very surprised if spreads somehow sort of miraculously rose again without some kind of headline. I'll probably get burned by the headline anyway, but put your money where your mouth is and aim for contango in Brent.
Yeah.
And ICE, gas oil, NOV, DEC is just about a buy. Let's just say that. Yeah.
Okay. Fair enough. I did have some conversations with some traders this week. We did talk about contango in the crude market as well. So I think that is starting to be kind of discussed. Okay. Anything else from anyone else before we wrap this up, I think? Brilliant. Okay. Next week, looking forward to kind of catching up on some of these views. So that's a wrap, as I said, for this week's Sparta Market Outlook. So we've covered it all. US inventories, flashing bearish signals, OPEC rumour mills in overdrive, gasoline cracks on fire by the looks of it, naphtha struggling to find a home, and crude spread softening. And let's also not forget the distillate play is still a little bit coy, but let's see where we get to on timing on that one. So look, plenty for the market to chew over in the next days ahead, and keep an eye on those headlines as well. So we're going to be back next week with more data, debate, and the usual dose of market madness. But before we sign off, though, I just wanted to kind of flag that we are hiring. So look, we're looking out for our next analyst and who knows, maybe our next regular on this podcast. Check out our careers page and I'll be reposting the roles on my LinkedIn feed. Particularly interested in Houston and Dubai right now, but we're always open to great people wherever you are. So if you fancy yourself as a Spartan and on this podcast, drop me a note on LinkedIn. We're going to be back next week with more to unpack. So until then, keep your barrels balanced, your hedges sharp, and an eye on those spreads for sure. So thank you for listening.
Thank you for listening, and we hope you enjoyed the podcast. For more information about Sparta or to book a demo, visit our website at spartacommodities.com.